Welcome back to Market Skycast, Blue Sky's official podcast. We are rocking and rolling now. This is going to be episode 5, and I think we got a good thing going. Before we get started, just a couple of announcements. We still are having this insane sale at Blue Sky where you can get a launch plan evaluation for under $30. You're not going to find that anywhere else. Use code WELCOME26 if you're a new customer and claim your evaluation. And also, secondly, Coach Mike, aka Mike Tolbert, the president of Blue Sky, has been streaming for I think 2 weeks now, and I don't know how many hundreds of $1,000s he has made live in front of all of our members. So if you're looking for some guidance and you want to see what a real heavy hitter does, come on, join the stream at New York Open, and see what real trading's about. Now, once again, we have our coaches, Matt, Becky, and Coach Riz. Welcome back again, guys. Now, before we get into anything, last week blew my mind because I'm an NQ trader. Monday, we went up 800 points. Tuesday, down 800. The rest of the week kind of slid. I'm just curious, do you guys think there was one simple reason, or do you guys think it was a multitude of reasons just mixed together? Or do you think it was just pure price action and playing the chart? Coach Becky, let's start with you.
I'm going to call the power of resistance. We have been in consolidation for weeks on weeks on weeks, and we made last week a new higher high, just poked above and fell back in. And to me, that is quintessential, taking out all the stops. And then now the real move, we're going to actually see a little bit of volatility now. So I think it made sense. It was resistance being resistance.
Yep. What about you, Riz?
Absolutely. After peaking out and running out of gas, you've seen the market just continue its downward path. Luckily for us, we've been able to capture those downward moves day by day. So it's been awesome for us. It's nice to see some volume and volatility in the markets again.
Yeah, I agree. Volatility is back on the menu. I'll say that. Coach Matt, what are your thoughts?
So what is the causation for price depreciation here? Is that the ultimate question?
Just the volatility in general and the movement.
I don't think there's anybody honestly in America right now that can point to one single reason why we're seeing the downward pressure in price. I think it's a big time debate, and I think you can point to probably 5 different variables of the causation. I pride myself on understanding causation, and I'm gonna tell you this one's a little bit tough right now. There's a lot. And so, when I look at it, it's more about the process of elimination of what it is not. And what I'll say what it is not is it's not the Fed, because the Fed reported monetary policy last week and we had a 20-point range on that and there was no volatility to it. So it's not the Fed. It's not earnings. Earnings had both this week and the previous week had macro earnings analysis improve, not deteriorate. So it's not earnings. It's not the Fed. Economically, we're pumping right north of 4% GDP with 3% inflation. Those have been the environments for 6 months, so it's not that environment. And so you try to paint to me the point of what it is, and I'll just say the market has felt very heavy this week. It's felt very heavy with a lot of the political information coming into the market, the geopolitical information in the market, and what I would largely describe as things that don't really matter to the market long term, but we're getting caught up in a lot of conversations in the short term. And so I just kind of feel like from the political to the geopolitical to 123 earnings reports this previous week. There's just been a lot of data, quite frankly. But I would say it just feels heavy more than anything. But I also don't have a tendency to believe that we're starting a big bad bear market here. I think we're just dealing with some heavy stuff in earnings season, quite frankly.
Yeah, and I want to remind you guys, you can say I don't know, because there's a multitude of factors. I don't know personally. I play the chart more than anything, and once I saw we couldn't break 26K on NQ, it was just a massive dump.
Yeah.
So a lot of factors, chart, news, short-term things. I agree with all that. Now, I just had to ask because a lot of people are blowing their accounts. They're trying to catch the bottom, and you know what? The bottom might not be in for a little bit at least.
Now, increasing volume with candles expanding. I would say the bottom's not in yet.
Exactly, but you know how many people try to catch the bottom? It can't go any lower. It can't go any lower. Guess what? It can.
When you catch a falling knife, it has a tendency to cut you.
Yep, 100%. Now, let's go back to some predictions we made last week. Coach Matt, you were all about earnings. Did anything surprise you? I know you have your did they beat, and how much did they beat by? Are there any companies that beat by less than they were supposed to, more than they were supposed to, or kind of shocked you?
You know, what is shocking me is not necessarily any individual component. Google slight down on a positive beat. Amazon, a little bit surprising. They actually missed by 3% this previous week, and they're getting absolutely shellacked here.
Yeah, what were they down? 10%?
They're down 10% right now, and I think that's just the starting bid, ask on that. And so it really wasn't any individual one report on the earnings side of the equation. But what I have seen, and this happens right around this time period as we get a lot of the Mag 7 components reporting, is specific themes that develop in earnings season. And one of the themes that has developed in earnings season so far is earnings has been good. Across the board, earnings have been good. We're dealing with 80% beats on the EPS. We're dealing with 6.5% beat rate on EPS beat rate. Revenue beats are up against 5 and 10-year expectations. Blended growth has improved dramatically in the last couple weeks. So I can point to the Palantir response on a good beat, show some negativity. I can point to Amazon's miss and that negativity. But in general, for every Amazon, there's 3 industrial and energy components that are doing absolutely great right now. And so I just think the earnings environment has been pretty good, quite frankly. But the specific theme that has emerged is if you're at the top end of the market, if you're at the close to the 52-week high, close to the all-time high, you better not just beat, you better beat and then some, because there is initial sells on even great companies that are doing great beats. And so I'm seeing, a little bit high bar expectations at the top, whereas when you're talking about companies that are coming from the low price, like for example, you're not seeing Verizon. It's just kind of facilitating that chart right now. But Verizon coming from a low price. You got AT&T coming from the low price. You got CDW coming from the low price. And so I can point to numerous examples of stocks gapping and running coming from the low price versus gapping and selling off coming from the high price. And that just leads me to believe that the market is concerned with the general environment. And when the market is concerned with the general environment, the path of least resistance with companies that have had a substantial amount of profit, i.e. near 52-week highs, all-time highs, they're just going through profit taking and removing some of the risk off the board, rotating in it to under what you would generally consider underbelly companies coming from those 52-week low positions. So that's really the only theme that I've seen this week in earnings. But I didn't see any one stock, quite frankly, and there was 123 S&P 500 components this week. I really didn't see any one stock that was just the end-all be-all catalyst. I think every stock has a story to tell, but I didn't think those stories to tell were major market stories, which is a little bit surprising given the fact that you had Amazon and Google this week.
In your opinion, since a lot of the stocks are at 52-week highs, do the numbers matter more, or does the guidance matter more?
Guidance. In the priority order of earnings, you got 3 major components you look at. You look at EPS, you look at revenue, and you look at forward guidance. And it goes probably, in terms of how earnings performs, I would say 60% of it is based on guidance, 30% of it based on EPS, and 10% of it based on revenue. And I think I'm being generous on the revenue handle, quite frankly. EPS is the most important. Bottom line, EPS is one of the most important. But remember, the market doesn't really thank you for what they've done in the past. The market is always forward thinking. And so that forward thinking guidance report is always going to be the epicenter of where people get excited about things. What you did for me in the past, good enough. That goes to valuation. What you do in the future, that goes to growth, more important.
Yep. 100% agree with that. That's a great answer to that question. Now, Coach Becky, you were looking at some specific data, but pretty sure you had a wrench thrown in your plan. So I'm kind of curious, since you are a trader and you're a psychological expert, did it change your trading style? And how do you deal with these things being wrenches being thrown in your plans in real time?
Ooh, I love that question. Yeah, monthly unemployment was scheduled to happen on the Friday, but actually it ended up getting rescheduled. So that was a non-event that was planned. And so now it's just moved to another day, which honestly, in the last few months, I mean, we've seen a whole lot of that from our federal government. So it isn't so surprising
or a lot
anymore.
of nothing.
Yeah. So, I mean, honestly, I look ahead at my week and even my month ahead on Forex as part of my trading system. But then the night before and morning of, I re-look at it again. That way it's fresh in my mind of what time frames I need to have my guards up. And so it doesn't really change my system that much because it's on my radar always. But then as I'm setting up my specific trade plan right before I intend to enter a trade, I look again to double check myself. So it wasn't really an issue, but I do think it's another example of stay flexible in this world of trading.
Mm-hmm.
Adapt is the key word, I think. If you
Mhm.
can't adapt, if that one thing is going to throw off your whole trading style, probably need to reevaluate what you're doing, right?
Yeah.
Yeah, and Coach Riz, now you had multiple things you were looking at, and a lot of them came out, during the New York session around 10 o'clock Eastern, 7 o'clock for these people on the West Coast. They can't change their clock over here.
Liberal
But
time, baby.
liberal time. Yeah.
CST
Now,
is the best time.
now I have a question. You are Central, that's true. Now I do have a
That's right.
question for you. Was there anything that you kind of mentioned last week that shocked you the most or popped out to you the most? And were you in a trade when that happened?
I think the most shocking thing were the JOLTS numbers being so low, down to 2009 lows, with the government shutdown happening, it made JOLTS even more important this week than it would have normally been, so that was actually a counter to the market that maybe a lot of folks didn't realize. Even me, it did take me, like you said, like you asked me, because I was in some trades and they went very good in my favor just because of the
Oh, that's good.
numbers. So, I was on the right side of the trade, but it just goes to show that, it can easily go against you in a very fast manner, See, besides that, we had a huge downturn in the market, the sell-off has been pretty significant. We're down 4%, I think now for the week, something like that. Then you got the crypto sell-off, that you can see the fear spilling into the other markets
Oh,
because of
Bitcoin.
jobless
Oof.
claims. A lot of people are risk off, going to safe havens. 10-year bonds are up. You've got like I already said, crypto is down. We've got gold and silver, people taking profits at an astronomical rate.
Yeah, I think with metals and especially crypto, once the profits start taking, it's just a slippery slope, and finding the bottom again is. I saw some projections Bitcoin in the 30,000s, by the end of the cycle, and
I wouldn't
we
be
were at
surprised
100
at
not too
that.
long ago. So that's brutal if you're holding.
I got
All right,
interest
well,
in the Bitcoin bottoming formation, but this thing's a free fall. Like
yeah, literally,
30,000. Well, who knows where the low point is, but just
Yep.
like wait on a reversal is all I would say.
yeah. And you talked about the
Yeah,
volume of candles, velocity of candles. I mean, look at that right there. Every candle's just getting bigger and bigger and bigger. The downside.
Wyckoff 101 right there.
Yeah, no kidding. Well, that's our end of the segment about just talking about our predictions for last week. Next week is our market watch segment where we're going to go over the data, the geopolitical climate, earnings, whatever is going to be the most important for you this week. So we'll be right back. All right, welcome back. And this is one of our segments, Market Watch. We're going to go over the geopolitical climate, earnings, data, whatever you need to know as a trader going into the week. Now, Riz, I'm going to start with you. What are you looking for?
Well, going into the end of the week, I would be looking for the CPI data. I think Monday is going to be a telling tale of the sentiment that we're going to have going into the week. Due to stagflation. That's a narrative right now that's happening, right? And prices are going up. Investors are looking at safe havens, so it's going to make these numbers even more important than what we've had in the past.
Look at all these red folders just looking at the screen. Now, I have a question for you guys personally, because when I see no news Mondays, I try not to trade in the morning until price kind of tells me what it's going to do. I'm just curious, all three of you, like yes or no, and maybe one sentence. Does no news Monday affect your trading style?
Nope.
Riz, let's just go Riz, Becky, Matt.
No,
No,
No?
it doesn't.
we don't
I
get a
guess
lot of
I'm
news
alone
on Monday
that
mornings.
one.
If
I'm
if
alone
they
on that
make
one.
that change to start bringing in major economic reports on Monday morning, I'm quitting.
Well, you never know with what they're doing right now. Speaking of that, I'm looking at the schedule. There's some anomalies. All right, now Becky, what are you looking at?
Yeah, so if we pull up the schedule, like Matt has on the screen right now, it does show that they reorganized that unemployment and put it from last Friday to this Wednesday. So, I say we just don't hold our breaths and we pay attention to the morning of what might be hitting when we're trying to trade and stay current, because as we're talking about right now, the volatility is heavy right now and anything can come or go. And so this calendar obviously is flexible for our government. And so there's just a lot of factors that I stay present with. And so to your answer even more about the Monday no news, I honestly just like that's my approach to all these days. Like I just want to see what the price action is going to tell me and have in the back of my mind if there's a news event, but lean into my system above all else and only enter when I get my criteria. And I think watching these dates, but trade your system, guys.
That's a great way to put it. And you mentioned the schedule. I mean, we had what 2-3 months without data. Then the data came back. Now CPI is on a Friday for some reason instead of a Tuesday like it usually is. So I think they're just doing whatever they want. And Matt, I kind of want to hear what you have to say about this.
I think it's utterly ridiculous that CPI is not on a Tuesday. Like, I don't know what to do with my life with CPI not on a Tuesday. This is absolutely throwing me off. And
work on that flexibility.
Like, I'm not flexible when it comes to calendars.
He's been here too long. He's stuck in his ways.
Like Monday's Monday, Tuesday's Tuesday, Wednesday's Wednesday. That's what I'm going to say. And Tuesday is for CPI Day. That's what Tuesday's for. Fridays, the first Friday of the month. Guess what, guys? That's Labor Day. And now we don't, it's throwing off my whole schedule. Like, I got to get the moons and the stars aligned right now. What I'll say is this. I think everybody's accurate. I think, personally, typically I'd say the earnings environment here, but unlike this week that had, Mag 7 components, major AI components, and 123 S&P 500 companies, you got 77, and the biggest company next week is Coca-Cola. And so it's not that there's not important companies next week. I'm looking at Arista Networks, Applied Materials for the AI side of the equation. You're starting to get a lot of cyclical, which has been a strength in this market. I know the AI trade in NASDAQ's been weak, but the QE trade in cyclical has been really, really, really strong right now. And so you're getting a lot of cyclical components, and I'm already bored just even thinking about all the reports coming out on the cyclical side of the equation. I kind of kid there because, let's face it, Google's report's just more exciting than Coca-Cola's report.
I'll agree with you on that one.
Said every single trader ever. So we get more Coca-Cola names than Google names next week. And so it's going to be important, but I do think it starts to simmer down. And I also would expect volatility to start settling in a little bit as well. I know it's been a very sensitive volatility week this week. I think that slows down a little bit as we start getting into the ending of earnings season, coming at the conclusion of next week. But on the economic side of the equation, I am very interested in the labor market data this week. And whether it's on Wednesday or 3 weeks from Wednesday, we don't know for certain. But when it does come out, you're talking, think about that labor data this week. No wonder they canceled that. ADP non-farm came in at 22K, expectation was 46. Initial claims came in at 231, expectation was 212, last month was 209. But Riz was right on the JOLT openings. That is an eye-popping number of a miss coming in this week. Job openings has been a strength of the labor market for years. It's not a strength of the labor market. And what we all know is there are generations in our labor market struggling right now due to AI and these fake job openings that we've seen corporations put out for the last couple of years are coming out of the equation. You talk about Generation Z, Generation Y, all of those are going to be struggling a little bit more in the labor market as AI starts to take more and more jobs. And now you only got 6.5 million job openings. 2 years ago, we were at 11 million. We are seeing the labor market implode. And it's in my estimation, how's the Fed going to respond to that? If the labor data next week craters, as we saw with ADP this week and job openings this week, you could rapidly expect Kevin Warsh to start embracing QE. And so it's going to be a really interesting conversation coming out of what I would expect some negativity on the labor side of the equation. And if labor's down and inflation's up next week, welcome to stagflation. Hello, 1970s.
Now, I have a question for you. Since we are dipping, numbers are coming in a little bit worse in the labor sector and things like that. At what point do you guys start to look for maybe loading up some long-term positions or swings or anything like that?
On the downside?
No, when do you start looking for upside positions?
Oh, coming out of this volatility?
Yeah.
I'll go first on that, and then I'd love to hear what Riz and Becky have to say on this one as well. But how I do it is I see it through a couple things. How far can you legitimately project out right now when you're looking at the pure technical environment? I am having a hard time projecting outside of intraday analysis right now. I have a hard time projecting out 2 to 3 days from now. So how is price going to behave on Monday? I don't know. I really need to see Friday type thing. And so it becomes a very sensitive intraday conversation. I think it's a day trading environment for the most part right now. And so it's really about how far I can project out there technically. But we're also starting to come into some really, really, really important support levels in IGV software components. The NASDAQ's a stone throw away from the 200-day moving average as of right now.
I was just going to bring up the 200.
I do think we start to see the contraction of volatility next week instead of the expansion of volatility. And if that starts happening at key levels of support, i.e. that 200-day moving average on the NASDAQ or on IGV where you're talking about the 200-day weekly moving average, I think once volatility starts to slow down, you'll be able to start projecting a little bit more out. And so I know this is a very sensitive technical conversation, especially in the NASDAQ and NASDAQ relatable instruments. But it's also not too abnormal when you do understand how earnings works. Like this is the biggest week, and so you're going to deal with a lot more volatility. Next week slows down. You'll be able to start projecting out a little bit more. So I need to see volatility decline. That's most likely going to be next week. And if support starts to build on those 200-day moving averages, I'm going to feel a lot more comfortable projecting outside of the intraday timeframes.
No, great answer. And I was literally thinking, I saw the green line on your chart, and I go, that has to be the 200.
Yeah,
so that's a great. I'm glad you
got to have that one colored green, right?
Yeah,
I mean,
exactly.
That's
the rest or whatever. This one you have to have if you're looking for long-term positions. And look where it lines up, right at support, right at the 200. I mean, pivotal moment. Yeah. Becky, what about you?
I treat the larger time frames similar to how I treat my day trades on the 5-minute chart. Honestly, I think the market and the time frames are fractal, and I think if you have a strategy that you like for seeing if a support is going to hold, I don't think that narrative is too different on the daily time frame versus the 5-minute time frame on an intraday chart. So for me, I want to draw my larger time frames, have my moving averages, and then as price approaches it with volatility, at that point, I set alerts, I pay attention, I trade my smaller time frames, but I don't do anything larger time frame until I see what happens. And so I would be looking for a candle pattern that shows me that the volatility down is stopping, we're hesitating on the drops, volatility directionally slows, the direction starts to turn, and then I would want to see some break of structure back up. Because right now in those larger time frames, all I see is structures breaking on every instrument I look at to the downside. So for now, I'm 0% interested in a long-term position on nearly everything that I would look at, but I'm definitely curious to see how it will go. And again, I agreed with what Matt said too about, right now we're seeing this strong volatility downward. Now's the time to just watch and wait and see, because you can't make a choice or a decision right now. What we have to see is this to slow and then start to see the next presentation show up, what that looks like, where it stops at, because just because we get to a key level doesn't necessarily mean that one will hold either. So I would definitely say not the time to catch a knife just because we get to the 200 or another key level. You have to get to that level and then see a pattern and a setup.
Yeah, absolutely.
Can I just say one thing, Justin?
Something? Yeah.
On that, because I love what Becky said. Buffett said buy in the streets, but only when the massacre is over.
That's a great point. And Becky, I think I agree with almost everything you say trading wise, because it's the same style of trading. The numbers just get a little bigger, the ranges get a little bigger, but it's still the same concept. So I absolutely love that. And last but not least, Riz, what would make you start to feel confident about maybe loading up some positions, adding to your retirement account, things like that?
I think if I were to see the dailies start to hold a little bit better, either at the 200 or above, I need to see some of those support levels on those higher time frames. Look out at the daily, the 210-minute. That's another time frame I like to look at. And if I can see that the market is starting to pivot, or even but there are some plays right now. There are a lot of opportunities that you could start. A big value play. You got Google. Google shares are down 4.9% for the day. So, there are some areas there that you could find some value. You got AMD that's outperforming NVIDIA in some aspects. It's doing everything that NVIDIA wishes it could do right now. You got Micron, MU, so you've definitely got some,
I like
you've got
Micron
some
on the pullback,
opportunities.
by the way, Riz.
Yeah,
Quite a
yeah.
bit.
I mean, that thing could run 11, 12x.
Yeah.
I mean, that's the
Demand
type
for
of move that you want.
days. Demand for decades, I should have said. Like, yeah, I like that too.
Exactly. So, there are some areas that I think you could scale into some positions. Obviously, I probably wouldn't go full size in just to give yourself some room that if price does continue down, you can still DCA into those positions, and that's a nice thing about holding shares. You don't have to necessarily worry about expiration. There's no sense of urgency that, oh, I need to do something, in the next 3 days or 4 days. So, but then again, that also really relies on what your risk tolerance is. And, if you're that type of investor that, you're ready to start getting your hands dirty and get into the market and start making your money work for you again.
Yeah, I think my biggest takeaway from that was scaling in. You don't have to put your full position in, because I've seen so many people just get absolutely wrecked because they think this is the bottom, this is the best time to buy, and you know what? It ends up going to the next key level, the next one. But if you 20% here, 20% here, 20% here, you can protect yourself. And again, they're shares, they're not options. It doesn't have to move by Friday. This is the long game. So great bits and pieces from every coach, and I absolutely love it. Now it's time for my favorite segment, the Ask a Coach segment, and we'll be right back with that. Now, welcome back to Market Skycast. This is my favorite segment. It's Ask a Coach. These are coaches from real Blue Sky members, whether they're brand new or they're seasoned traders. All the questions matter, because if you have the question, I can guarantee you at least one other person has the question, and we've probably all had these questions ourselves. Now, Coach Riz, I want to start with you. This one is, I've been watching tutorials and reading a ton, but I still feel lost. Where should I even start without feeling overwhelmed? Because I know we all felt like that when we started.
Yeah, definitely. That's the hardest thing about the online tutorials. The first thing I would do is make sure you're not studying multiple topics. If you're going through the YouTube and you're finding all these different strategies and you've already looked at them, kind of evaluate and figure out the one that kind of clicks the most or makes that's the clearest to you, because that's where you need to start. Then focus on that, expand on that, get the questions, go through that video, find other videos that line up with it so you can find other folks' perspective on how they use it, their interpretation, and how they're applying it to their trade strategies. And then from there, it's really important that you're going to want to start to back test on that. A lot of traders get caught up at the very beginning of, adding a ton of different things on there. And that's not how you get started. You need to start off with one, master that, and find the flaws in that. Once you find that flaw, move on and add to that. What is the next confluence to make that first initial indicator, stronger? You give it more validity to where now, all right, now you've got two strategies for you. So, I think that should help traders.
That's a great point, because I know when I started, you go to YouTube, you type in how to day trade, million videos pop up, information overload. This one's free, this one's not free. There's just so many things. So I think that's a great point.
This one's $14,000, but a low price of $27.95.
Yeah, today only $27. But I love that, because pick one thing, learn that, move on to the next thing. Don't overload yourself, and I think that's great advice. Now let's go with you, Matt, for the next question. Some days I'm on fire, other days I can't do anything right. How do you keep consistency when your emotions are all over the place in trading?
That's a great question.
We've all been there.
Yeah,
you have highs and you have lows.
I'm laughing because I'm like, yeah, there are days that I just don't want to do a damn thing. Before I go into that, can I just ask Riz a question on the on-demands, and Justin, you as well? What percentage of people that started on demand on the educational side of the equation, regardless of topic, finish the on-demand?
I mean,
if 100 people started on demand simultaneously, how many of them finish it regardless of topic?
10.
Probably, yeah, I would say 5 to 15. 3? Wow.
3. Wow. People's intention versus effort and execution is a little bit different. And so it's extremely hard without somebody holding your hand and specifically holding you accountable to make sure that you're doing the things you need to do. So until you have that dedication, get into Becky's lab, who does it on Tuesday after the market. She'll work with you on the mindset to get there. Get in my technical lab on Thursdays in Discord, and we'll start working on technique. Because when you're in a live setting like that, anybody who ever has attended my lab knows I am very willing to hold you accountable to certain things. And,
no, I've heard you.
And to correct the record when I think you're wrong. Because let's face it, when I'm teaching technicals, you're wrong. That's how it works. I kid. That's a joke, slightly, not really, but you do get the point. And so, yeah, like Becky in my lab, like those things will help you out a tremendous amount. And then as you're in that, you take on demands when you have the structure and the discipline. But thinking you're going to go watch an on demand on YouTube and learn how to be an awesome trader, intentions aside, I don't like your probability of success. There's better ways to do it. Now, in terms of the consistency, I think routines are extremely important to help you with consistency. I know life hits us all in a variety of different ways, and having a specific routine that you go through will keep you grounded on that. I deal with a lot of people in a lot of different aspects of the market, from day trading to long-term investing to portfolio design in 401ks and IRAs and all the things in between. And I'm going to tell you right now, when it comes to, when people miss opportunities in the market and they feel themselves chasing, it's because they didn't do their routine last week. They didn't sit down. They didn't do the routine. They didn't identify the things they needed to identify. And all of a sudden they hear a story of somebody making some money in an asset class and they chase it, and it doesn't work for them. Well, the trades you're going to hit next week, especially outside of day trading, swing trading, is based on the conversations you're having today. Understanding what you need to set up to hit tomorrow, for example. And that is routine. You should have a specific weekly routine that you go through, and part of that weekly routine should absolutely be watching the Skycast podcast to make sure that you get all the information you need to dial in that week. But make sure that you understand what economic reports are coming out that week, what earnings reports are coming out that week. That first segment we had, that's basically your weekly routine prep. And then on a day in, day out basis, what is your specific routine? What assets do you trade? What time periods do you trade? Do you look at the economic calendars? Do you go through the process of getting the news? Sit down and go through your daily routine. I promise you, everybody's busy in the world. You're not busy enough to do something for your future. Sit down today and put a routine in place. That will help you build on the consistency in the future.
That's a lot. So what I'm gathering, though, is it's less technical and more just routine and doing the things you need to do.
In terms of consistency,
yes,
technicals don't change.
Agreed.
Like a big candle with big volume is the exact same thing 130 years ago, according to Wyckoff, versus it is today. Like, that's not going to change. Elliott Wave taught 100 years ago. We're still talking about it today. Charles Dow gave Dow theory, and guess what's dominant today? Dow theory. Jesse Livermore said, don't buy without confirmation because it's your insurance. You're right on your projection. And guess what? That's 100 years ago. We're still talking about it today. And so technicals don't change. The book on candlestick analysis was written literally 300 years ago, and Steve Nissen, who ripped that off and basically brought it to the West, did the exact same thing 20 years ago, and the candlesticks haven't changed. And so, no, I don't think it's the technical side of the equation changes. That changes every day. What you're going to do about it is based on structure and routine. And so, yeah, I do think. Now, if you don't know how to read a candle, go to class and learn how to read a candle. But outside of that, no, I don't think that changes.
Yeah, that's a great point. I 100% agree with you. So I just wanted to hear you go on a little rant right there, brother.
You know how to trigger me, Justin.
I got you.
That's what's going on.
And last but not least, Coach Becky, you and I have been trading about the same amount of time in the market, and I've had this question myself a ton of times. So the question is, how do you know when to trust the strategy versus just trusting the gut feeling? I feel like I'm always second guessing myself. And I guarantee you that person is not alone with that question.
No, I completely understand that so much because you study and you create a strategy and you have a technical analysis, you have learned from mentors, and you have an understanding of what your good trade would look like. And then when that presents, you know logically how to get in based on backtesting and studying and how you want to trade it. However, the feels start, right? And that can mess us up all the time. And I don't think there's very few traders that are immune from that. And so I think that it is a growth in order to be able to try to always stick with your technical system and don't necessarily downplay your intuition, but put it in its place. And so that is a skill you have to learn over time of having a strong sentiment that the market is very bearish and I am interested mostly in a short position today because of XYZ. However, I need to see this on my candles in order to execute a trade. And so to recognize that those are key components of your system, but to be as specific as you can and what you need to see to put your risk on the line will help kind of put it in its place. So it can contribute to what you are looking for. But I think you do have to recognize that by putting risk out there, you want to be a little more specific than that, because what happens when you allow your intuition to get too much say in the matter is you chase bottoms and you chase tops and you get in when someone else is getting in because of FOMO. And so I think that that is the catch with that. If you enter that gray area where your intuition drives you even more so, you will get caught up in energy and FOMO and yes, following it forever. I'm definitely going to have everything that you short is gold right now. So you just keep shorting and then that is the whole. So I would definitely say recognize that intuition has a place and it should be a factor as you grow with your intuition. But in your first several years, lock into that strategy. That has to be key because this is real money and it counts on the line. So treat it as a business and then let the intuition kind of take a back seat for the most part. That's what I try to do.
You answered that perfectly. Now I'm curious because I have a certain tell when I know the gut feeling is taking over my strategy. Do you personally have just one thing where if you notice it, maybe it's time to just stop trading that day?
I think my body language, I think I start to sit forward a little bit.
Yeah,
I'm like, looking at my hand is on my mouth. Yeah. I'm like, I get a tap a little bit. And it's like, it's because I want it to do what I want it to do and it's not. And that's usually when it's the special friend of mine, because if it was a technical setup that worked, I wouldn't have that. But it's more so when they're counter to each other that the intuition is back talking the strategy. And then my body is feeling that. That's the fight or flight kicking in where I'm like, but I want you to go down. Like, why aren't you? Yeah, and so I definitely, there's a body language to that too. I can feel myself accelerate because it's not working as I wanted it to. Well, that's me trying to lead with intuition, and that generally means I need to close the trade.
Yeah, absolutely. I notice if I ever talk to my monitor, something's not right. Oh, go up, go up. Oh, what are you doing? I gotta stop. And that's a great point. If you didn't catch all that, go back and listen to that part specifically again, because that'll save you so many blown accounts and so much money. Well, guys, thanks again for coming in for another episode of Market Skycast. That's going to conclude our episode. Remember, welcome 26. If you're a new customer, 50% off a launch plan. You can get a plan for $29. You're not going to find that anywhere else. Other than that, we are on YouTube. We are on Spotify. We're on all major podcasting networks. Give us a follow. Give us a like. Share with a friend. We love seeing comments. We love feedback. And again, if you do want to be featured on the podcast as a trader, we would love to interview. And other than that, message any of us any questions you have. We would love to have you featured on here. We don't need to say your name. We can say your name if you want a shout out. But other than that, until next week, stay profitable.